If you have not watched the news this week, there's a big movement starting in the silver market. This might make the price of silver go much higher and has possibilities of breaking the manipulation that has been present in the silver market for decades. Please note that the opinions expressed in this video are my own. I am not a financial expert nor a financial advisor. You should always do your own research before making any financial decisions. Here's the condition of the silver market right now. First, the banks, hedge funds, and large silver-consuming corporations are using short positions and options to suppress the price of silver. The current silver production is in between 800 million and 900 million ounces per year. The paper contracts compared to the actual physical silver are around 500 to 1. That means that there are 500 claims for each ounce of silver in existence. The reason Wall Street has been able to get away with this is that almost no one claims the metal. They settle for currency payments instead. On large trading days, there have been several times where over twice the annual production of silver has been dumped on the market to make the price plummet. This is only possible because of paper contracts. No one has that much silver to dump. It is estimated that 30% of the silver positions are shorts. These are people that do not own silver but sold contracts to it. They profit when the price of silver goes down, and they lose if the price goes up. According to my own research, the real price of silver should be around $123 at the lowest. I will show you this calculation a little bit later in the video. So right now, let's just say that silver is grossly undervalued. So what is a short squeeze, and where is this one coming from? A short squeeze is done by investors finding an asset that has been shorted to excess and investing heavily into it to make the price go higher. As the price rises, those who are short start losing money, and the higher the price goes, the more money they lose. Because shorting is often done on margins, this is when a speculator borrows money to amplify the size of his position. They also need to pay a lot more interest on the loan. If the price goes high enough, their position will become undercapitalized, and they will start to receive margin calls from the brokers. When that happens, they have two choices. Either invest more money in a losing trade, or close the trade by buying back the shares at a higher price and thus losing a lot of money. If they decide to close the position, the act of buying back the shares will send the price even higher. If they decide to double down on the short and pay the margin call, they expose themselves to even more losses as the price continues to rise. This is why shorts are considered to have an infinite downside. It is a really risky trade to do. Short squeezes are nothing new. They have been done for years. The difference this time around is that the one on silver is being done by a group of small investors coordinating their actions through social media. The group calls itself Wall Street Bets. They are present on Reddit and on Twitter, among other platforms. Recently, they made the price of the stock for the company GameStop go from $20 to over $483. GameStop was shorted by 120% of its available shares. In other words, for every 100 shares the company made available, big hedge funds shorted 120 shares. This made it an insanely risky position for them, and it was a prime candidate for a short squeeze. Right now, Wall Street is trying all sorts of things to prevent those hedge funds from going bankrupt. The largest fund cut with his pants down, Melvin Capital, is said to have lost well over $2 billion in trades so far. Now, you might wonder what that has to do with silver. Well, the same group on Wall Street Bets has decided that silver will be their next target. They recognize the position the silver market is in and started buying in on January 27, 2020. On the first 3 days of trading, the price moved from $25.23 to $27.65 and then closed the week at $26.93. So what can we expect from this organization against the players who are shorting the silver market? First, let's have a look at what silver is actually worth.
Depending on who you listen to, you will see numbers like $100 an ounce to $300 an ounce to $1,000 an ounce. Everyone has their own way of calculating this, and I will present the one that I believe is the most realistic. So the method is to calculate the price of silver in relation to the price of gold. Let's see what that looks like. Through history, the price of silver compared to gold has fluctuated a lot. The actual ratio of silver being pulled out of the ground compared to gold is about 8:1. So for each ounce of gold that is mined, 8 ounces of silver are mined. Historically, silver has traded at 15:1 for a very long period. So I will use this figure for this example, but feel free to recalculate based on what you think the actual ratio should be. Assuming that gold is trading at its correct value right now, this is doubtful because gold is also manipulated, but we need to start somewhere. With gold currently trading at $1,848 an ounce, silver should be trading at $123 an ounce. So this is where people are basing their $100 plus per ounce estimates. Those who throw numbers like $300, $500, or $1,000 per ounce use the exact same calculation but reevaluate what they believe gold should be trading at in the first place. And that number varies from $3,000 to $10,000 per ounce. So what do you think will happen with this movement? First, I believe that the buying pressure being put on the silver market will make the prices rise. By how much is hard to say, but it should be very positive for at least a short while. On the other hand, I do not believe that this pressure will cause silver to climb to $123 per ounce. Let's have a look at the forces on each side of the battle. So those who would want silver to rise in price include the long-term investors in silver who owns a lot of physical metal and/or paper silver in ETFs. The other group would be the small speculators like those in Wall Street bets who don't really care about the long-term price of silver but want to make money breaking the short positions. On the other side of the trade, we have those who want the price of silver to remain low. Those include large companies that use silver for their products and have massive amounts of money to short the market, like Apple, Samsung, Tesla, and many, many more. Governments also do not want silver to compete with their national currencies, so they want the price to stay low. The third group would be central banks, who are trying to buy precious metal at the lowest price possible. And finally, you have the big bullion banks like JP Morgan, who make a lot of money trading silver by making the price drop and having the options expire worthless. So what I think is that the price of silver will very likely rise to $53 per ounce and then crash back to $20 like it did in 2011. I might be completely wrong, but looking at charts and historical trends, this is what the data is showing me. Here's what Peter Schiff had to say about this.
Will the Reddit guys, will they actually be able to succeed and cause the price of silver to make as big a move as the moves that we've seen in these heavily shorted stocks? And the answer to that question is no, because these heavily shorted stocks had a much, much smaller float and were much more easily manipulated in this organized short squeeze. It is not going to be nearly as easy to move the price of silver, either in the physical market or through the ETF. It's too big a market relative to the size of this group.
So with all of this being said, what should you do? If you want to join in on the movement, I see two methods that would work. One, simply purchase physical silver. I will leave a link in the description to a company that I like and trust. The other method is to purchase an ETF that is backed by physical silver and does not belong to a bank. The most obvious to me is PSLV, which is owned by Eric Sprott, a long-term investor in physical metals. What you don't want to do is buy SLV. SLV is owned by BlackRock Capitals, but the custodian for the physical metal for the funds is JP Morgan, the biggest silver manipulator in the world. Let me know in the comments if you plan to help this movement in any way and what your plans are. If this video was helpful to you in any way, please hit the like button to let YouTube know that others might like it too. Also, share the video to people who might benefit from this information. If you have not done so already, subscribe so that you can get other videos like this in the future. Thank you for watching.